Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Friday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. Finally, we can see some consolidation on the chart of gold after the crazy upside. And this is how volatility works in the market. Market always move from high volatility to lower volatility and lower volatility to higher volatility. Gold was crazy volatile. So, okay, gold going into consolidation should not be a surprise to us. In fact, we can expect gold to remain sideways or choppy in the next 1 or 2 days because market will be taking risk for a while. Okay. So, my dear friends, if you have any ongoing position in the market right now, whether it's a buy or sell, doesn't matter. Okay, you can continue. But if you're looking for a fresh position in the market, then obviously this is not the ideal market to look for swing or position trades. Because as long as market will remain sideways or choppy, okay, we should be looking for day trades only or scalps only. Because see, we are retail traders. Okay, we cannot predict the direction of the market. This is not in our hand. The only way to survive in the market is to be flexible. We need to be flexible. For example, when gold was extremely bullish, I told you guys that buy at retracement and sit on it. But now we can see that there have been some changes in the market. Okay, and most of you have exited from the positional buys. Great job. Now, as long as the market remains sideways and choppy, okay, we will have to look for level to level trading only. Okay. But we must not forget, my dear friends, today is Friday. Yes, for the last couple of months, Fridays have been crazy. Friday have been frying accounts. Okay, so please be careful during the US session, especially if you see that there is a sudden move in the market, just go with the flow. Because whenever there is a crazy volatility in the market, as a day trader, you will have to follow the trend of the market. That is the only medicine. If you're a beginner, new trader, if you fail to understand the market, then just skip the market and wait for the market to close. The weekly closing is going to be very important for all of us. Right now, we can expect a weekly closing to be between 2760 to 2700, and I'm expecting the market to stay within this range for the next 1 or 2 days. And yes, as I said, okay, weekly closing is going to be important. And during the US session, we have some news coming up. Not a trendsetter news that will change the direction of the market, but this will bring volatility. So please be careful at the time of news. And if you look at the market sentiment, okay, you can see gold edges lower on possible technical correction. So market is more or less expecting a technical correction. Again, I'm repeating, my dear friends, trend reversal, technical corrections are different thing. If you have exited from your positional buy positions, then well and good. Okay, you don't need to go for a sell right now. Still, this is not a market where you take a sell and sit. No, if you are taking a sell, then you need to exit on the same day because the market sentiment is still bullish. Geopolitical tensions have not eased at all. Okay, they are still going on. Okay, so technical correction, if it happens also, day traders and so positional traders and swing traders, you will get a better opportunity to enter again for a buy. Clear. But right now we can clearly see that there's a high chance of market being sideways or market staying in a range. So as long as market remains like this, what should be a trading strategy? Level to level trading. Because in this market condition, if you take a buy for next couple of days or take a sell for the next couple of days, there's a high chance that okay, you will not get the reward you are expecting because market will remain in a range. If market breaks the range, try to understand, if market breaks the range, then you can expect the market to take a trend. But as long as market is trading inside the range, you need to be flexible and just trade accordingly. Clear? So what are the trading opportunities for a day then? Let's discuss one by one. So right now we can see that gold is trading around 2727 area. Okay, so during the day, okay, if market drops, because right now we can clearly see that there is not much volume in the market. Okay, if market drops, we can look for a quick bounce of around 40 pips around 2716 area. The second support on the chart of gold will be around 2713 to 2709. This is our second support on the chart of gold. This is our first support on the chart of gold. Remember, we are not expecting any swing trade here, and the weekly closing will be important, so we are just looking for day trades only. 40 to 50 pips max. 2716 is the first support, 271309 is the second support. Okay, and in case of a big drop, okay, we have the best support around 27002 to 2698. Okay, these are the three support on the chart of gold where we are looking for a buy, or where we can look for a buy as a day trader. And in case of a huge drop in the market is full of surprises, isn't it? Okay, in that case, we can look for a buy around 2680 area. 2680, 2678. But chances of market going to 2680, 2678 is very less for Friday. We can expect the market to come down to these three levels only. Okay, why are we expecting these three levels? Let me explain. So 2700, 2698 doesn't need any explanation. We have discussed plenty of times. I don't want to bore you again. Okay, and we are expecting support around 2609, 2613 area because of previous support around this area. Moreover, we can see the 200 moving average also coming up. So if we combine the previous support and the dynamic support, this should be a good buy opportunity for day traders. And we are expecting 2716 area because of FIBO 78.6% retracement level. Okay, if you guys want, then you can also look for a quick buy around 2722 as well. Where? 2722. Okay, how much you can expect? 30 to 40 pips, not more than that, because right now we can see volume is pretty less in this market condition. Okay, if you get 30 pips also good enough. We need to be realistic. Okay, because couple of days ago market was easily giving us 300-400 pips. Okay, because that market had the capacity to deliver. Right now volume is less, so if you expect the same target, obviously your TP will not get hit. Okay, so 2722. Okay, 2722 also a good scalp buy. Then 2716, and rest of the levels are same. Okay, if market goes up, then as a day trader, okay, as a day trader or scalper, you can look for a quick sell around 2748 to 2750 area. Okay, around this area we can look for a sell. How much we can expect? Again, 30 to 40 pips, not more than that. If market breaks it, okay, then just leave it. For example, when market will enter 274849 area, observe the market behavior. If you see market is showing price ejection from above, then only hit the sell button. If you see that market is standing at 2748 with a big green candle, use your common sense, no sell. Okay, I think after a long time we are discussing about a sell opportunity. Okay, why are we discussing this area here? Because of FIBO 78.6% retracement level, 30-40 pips, not more than that. Okay, if the selling pressure is very high, okay, then that's a different chapter. Okay, but initially target 30-40 pips only. If markets shows you that okay, there's a higher potential, then you can go for it. And as there's a high chance of market being sideways, then 2758, 2760 may also act as resistance. If market reverses, if you see good price ejection from above, then only go for a sell. During the US session, again I'm repeating, today is Friday. During the US session, if things change drastically, be flexible, go with the flow, because we are retail traders. We need to be flexible, otherwise market will throw us out. Okay, so be careful, follow proper risk management. Bye bye, take care, love you guys, see you tomorrow, and do not fry your accounts.